I recently came across a video from DataTrader named The Best 5-Minute Scalping Strategy, and if I see a title like that, I have to test it out. This scalping strategy is fully objective and surprisingly needs zero indicators. In the video, he clearly explained all the rules of the strategy, but as usual missed one crucial aspect, and that is the backtesting. So in this video, I will explain you the full strategy and reveal the backtest results, but not only that, I will show you a modified version of this strategy that is way more profitable for the BTCUSDT 5-minute chart. So without wasting any time, let's get right into it. Okay, so for this strategy, first head over to TradingView and set up the BTCUSDT 5-minute chart. DataTrader showcased the strategy on 2 time frames, the 4-hour and then switch down to the 5-minute, but you can do the strategy with using only the 5-minute chart, so we are going to do that. As I said, this strategy needs 0 indicators, so now we don't add any indicators. Let's jump straight into the rules of the strategy. First of all, for this strategy, you have to go down into this right corner. Click here on this time button and change the time to UTC-4 New York session. If you got that, you will see UTC-4 right here, and then zoom in. The first step is to find the midnight point, or 0000, and the 4 AM point. But we are not going to use the 4 AM point because we are on the 5-minute chart. That means that we will need the 3-hour 55-minute. So mark down these 2 levels, this, the 4 AM, and this, which is 3:55. In the next step, now you need to find the lowest and the highest point in that range. As you can see, I already draw a rectangle around it. So if you want to do that, just go down to the left side, click here, and find the rectangle. Then you can start clicking on one of the edges you want to draw it, and you can draw a rectangle around it. Now once you got this range, for a valid long position, we are waiting for the price to break under this range and close under it, and then break back above it and close inside or above the range. Now as you can see, the breakdown and the close below happened on this candle, and the break above back into the range and close in the range happened on this candle. That's all you need for this strategy. This means we can enter into a long position. Now DataTrader said that the stop loss should be placed at the swing low of the pullback, which is this point right here. But as I am always about objective rules-based strategy, I coded the script so it places the low to the lowest point of the last 10 candles. That almost always will give the same as what DataTrader said. So let's see this long entry. Entry will be here, stop loss will be here, and at all times we are using a 1:2 risk-reward ratio for the take profit. That puts the take profit right there. Now this trade was a losing one, but we will backtest the whole strategy, so don't worry. Now let me show you another long example, then we are going to see a short example. So after this losing trade, we can see that the price again breaks below the range and closes below it. So now we are waiting for a break and close above it. And that happens on this candle. So this is another valid long entry. Stop loss again to the pullback low, for which I will use the lowest point of the last 10 candles, that is here, and we are using a 1:2 risk-reward ratio for the take profit level. And this trade was another losing one. Now let's find short examples. Okay, so this is a new day. We need to draw a new rectangle. As you can see, this is the midnight point, and we need to find the 3:55 point, which is here, right there, you can see. And again, let's just mark out the highs and the lows. So this will be the highest point, and this will be the lowest point in that range, right there. And now for a short position, we are waiting for a break above the range. And that break above happens on this candle. So now we are waiting for a break down and close inside the range, which happens on this candle. This means we can enter into a short position. Stop loss will be placed at the break up and break down swing high point, which is right here. But I am using the latest high of the last 10 candles. And the take profit again, a 1:2 risk-reward ratio. And in this case, this was another losing one. But here you can see a profitable one. So what we see here, price breaks above again the range, then starts to come back and breaks down inside the range again and closes inside the range. That means a valid short entry. Stop loss again to the break up and break down swing high point, which is this level. Or what I'm using, the highest point of the last 10 candles. And again, a 1:2 risk-reward ratio for the take profit level. And as you can see, this time the trade worked out. So those are the rules. Very simple, easy to learn. But what about the backtest? Let's see. So as I said, I built a strategy around this concept. It's not 100% exactly the same, but around 95%. So these backtest results should give you a clear view of how good this strategy is. This time I am not using any commissions. We are using 5x leverage on each trade compared to the initial capital. And here are the results. And let's see the results for the last 7 days. It's losing the last 30 days. It was profitable, 71 trades, 15% net profit, that's pretty good, and a 1.25 profit factor, not so great, but acceptable. Last 90 days. Last 90 days is losing again. And the last year is a very, very big loss. 900 trades, 200% drawdown, and 185% loss. So this is why all the strategy videos that you see online that doesn't show any backtesting results should not be treated as a good strategy. Either you have to backtest the strategy to see if it's really profitable, or you just want to see a YouTuber that clearly shows you the backtest results for that exact same strategy. But now, as I mentioned, I couldn't let this strategy sit like this. I added a few filters, a few options, and re-optimized it. So now let's see the results for my optimization. Okay, so for my optimization, now here at the range settings, you can see that the starting hour is 3 and the ending hour is 8, but that's not the case because we are using UTC -4, which means you have to count back 4 hours. So this hour is actually the latest day, 11 p.m. and this is the current day, 4 a.m. Now I disallowed multiple entries per day, so we only enter 1 times each day. And instead of a swing low, swing high stop loss, we are using an ATR based stop loss, which settings you can see here, with a 6 times ATR multiplier for stop loss and a 15 times ATR multiplier for take profit. That's around a 1 to 2.5 risk to reward ratio. I added a trend filter using the RMA or the SMMA, one of my favorite trend filter indicators, with a 170 length. And I added one of the best filters I've ever found, the TDFI. It uses a 40 lookback, 0.5 for high limits and -0.2 for low limits. We also allow both longs and shorts, but we disallow trading on Monday, Tuesday and Wednesday. And that's all for this strategy. Now let me show you the backtest results. And if you want me to explain my version of this strategy, let me know in the comment section and I will do it in a future video. So first, I'm not going to add any commissions, but don't worry, I will show you the results with commissions too. I just want to show you the comparison to the original strategy. My optimization range was from 2021, the 1st of March. So that one, and the end date was 25, the 1st of March. Yes. Let's wait the results. And as you can see, this performs pretty well, but of course with no fees. Let's add the fees now. I will add 0.1% commission and a 2-tick slippage. The results are still profitable, but not as good of course. 28% maximum drawdown, 300% net profit. Compared to the buy and hold, it still outperforms Bitcoin, which is good. A healthy 200 trade in this 4-year period, 35% win rate, and a bit low 1.3 profit factor. But as I always say, the results in the optimization date range are not the best to look at. You need to take a look at the after optimization date range backtest results, because that's what can tell you how much potential a strategy has. So now let me set the start date to 2025, the 1st of March, and the end date to 2025, 1st of September. So this is a 6-month time interval, and as you can see, it's still profitable, which is good, but the equity curve pretty much stagnating at this point. Compared to the buy and hold, it still outperforms Bitcoin, and as you can see, Bitcoin is also stagnating in this range, so probably that's why it doesn't perform that good. My strategy has a bit different entry rules compared to the original strategy, so if you really want to check out my version, let me know in the comment section, and in the future I will make a video of it. In this video, I just wanted to explain you why it's really important to backtest any strategy you see online and want to try out, because as you can see, this strategy, without even using fees, is losing. And that wraps up today's video. What do you think? Should I make a full premium strategy script out of this concept? Let me know in the comment section. If you want to check out my best strategy scripts and optimizations, check out this video or check out this playlist. As always, thank you all for watching, have an amazing day, and if you want to support my channel and get access to my best scripts and optimizations that can be turned into algorithmic trading bots, check out our Patreon page and become a Smart Trader tier member. Until next time, trade smart.